Hi everyone, thanks for joining us. This is actually our fourth session for the monthly Mingle under SG Founder and Makan for Hope. So it's really nice to see everyone on this Saturday afternoon. I had an earlier session at 11 a.m. and then now we have one at 2 p.m. So today we would like to discuss a bit more about fundraising in Singapore and also across Asia. I think this topic is really close to heart because I've been doing investor relations specifically since 2019. So I've seen, and also I started in entrepreneurs since like 2011. So I've seen how like the whole fundraising landscape has evolved over time. So it's really interesting to discuss this and hear your thoughts and questions, and maybe we could all find out more something new, through this session. So Zhongye, would you like to share a bit about your fundraising journey and some of the challenges that you face first?
Yep, I'm happy to share. I think Southeast Asia is not really fully maximizing its potential, because if you were to compare Southeast Asia to India, I think the GDP is roughly similar internet penetration rates and growth rates. But if you take a look at the interest of venture capital firms, I think there's a huge gap. Especially more so in Singapore, where most of the venture capital firms seems to focus on Series A and above, on the larger check size, and that there is a huge gap in the 500K to 2 million round. So in the context of e-commerce, for example, if you were to look at e-commerce in Southeast Asia for the seed round, I think you are limited to Global Founders Capital, Sequoia, maybe East Ventures, and DSG Consumer Partners. So I truly believe that Southeast Asia has a huge potential to grow based on what you have seen in India. And right now, especially when the e-commerce scene is so vibrant with PharmEasy, HealthCart, Mama Earth, and many upcoming insurgent brands and direct-to-consumer companies. So I'm pretty hopeful for Southeast Asia.
Thank you. I think Sarah, it would be interesting to hear from you. Your what's the scene like in India, and also are the investors in India okay with investing outside of India?
Sorry, was that for me? Sorry, I broke up a little bit. I have been pleasantly surprised with fundraising in India, actually. Of course, right now I'm not building a consumer e-commerce company, so I can't really speak to that. But generally, I found that they're more open now to investing in companies where they know that product market fit will take a bit more time. It's not that you launch a website and suddenly you're making sales. And this was not the case 5-7 years ago, but I think that is still very much the case in most parts of Southeast Asia. Again, I don't know much about fundraising in Indonesia, but it does seem like for the rest of Southeast Asia, it's a bit more traditional. VCs want to see a different kind of traction by the time that you've proven out if a software product is actually working. By the time you may have already outgrown the VCs that you're speaking to. And I think the risk-taking, I wouldn't say risk-taking ability, but I think the risk-taking mindset is still evolving. It's probably going to take a few more years, a few more exits for that to show through.
Yeah, thanks for sharing that. Maybe I'll come back to you later, asking your experience of fundraising from individual angels later, and the tool or the platform that you use. But now I want to ask Gerald to share about your experience, since you are quite connected to the US ecosystem. How is the fundraising scene like? How for early stage startups, where is the source of funding coming from?
Yeah, so I can't really speak much for Southeast Asia, to be honest. Like, I haven't really entered the whole ecosystem here. I haven't invested in any company in Southeast Asia. Yeah, and mainly my network is all in the US. So, but what's happening in the US is pretty, I mean, like people are accepting of risk. Then I think the main differentiation is just like the acceptance of risk, right? Like Asians is just generally more risk adverse and naturally ask for all this traction and everything. Versus in the US, like people are more rather they think of it as like placing bets. So really good example is like Clubhouse, right? I mean, we all heard of Clubhouse. The valuation hit like crazy, like above $1 billion. But if you think about it in perspective, right, like Instagram was worth $1 billion back then. How big it was Instagram versus how big was Clubhouse, right? Which is like I think Clubhouse point like a year off. But I think the rationale of what VCs invest in that valuation is based on like the probability that this app or with this company will be as big as whatever like big shots are out there. So like if let's say the big giant is worth like 40 billion, so you are valuing it at 1 billion means like you have a 1 in 40 chance of becoming that. So that's how some VCs in the US think of it like that. And that's how they derive it to such a little bit higher valuation. Also, mainly because of the market sizing, I mean, accessibility. But yes, I mean, to I think Zhong Ye's point earlier, I do think that there's a small little gap where we call it like micro VCs or like the syndicates around, and partly possibly due to the fact that Singapore or like Southeast Asia hasn't had a lot of unicorns exit yet. I mean, there's just a growing of unicorns, right? But if you think about it, like a lot of these US companies, they have like tons and tons of exits. So they form like all these syndicates, and most of these tech leaders then form up their own VC funds that they raise like like 30 to 50 million fund. So they are able to capture this part of this market. So that's I think one of the reasons why we see this playing out, where maybe in the next 10 years, right, where we have more rounds of exits here, then we see that gap being filled.
Yeah, thanks for sharing that. I think the growth of micro VC is definitely a trend that all of us are observing because, for example, with the Grab spec that's happening, and also I think across the region, there are early entrepreneurs, early employees who are cashing out on the equity, how this may result in CDKs, micro funds that are being set up and then investing into their vertical or expertise. That will be very interesting to see. And I think that it will fill the gap because like, for example, in Singapore, what we see is that government play a very active role. So a lot of VCs are invested or supported by government, and therefore they have to drive a certain agenda. Like for example, investing into like the ABCDs kind of technology. So A is like AI, B for blockchain, C for cloud, and I think D for big data. And what happened is that money will be going to these sectors. But the thing is that starting a good business doesn't mean it has to be a unicorn. It has to be like a huge company. It has to be VC funded, right? So being an entrepreneur, as long as you create a solution that serves a sizable market, that is great as well. So who is going to fund these companies that fall out of this technologies that emphasized by the government? So I mean, that there could be grants that will support, but grants usually have this bad rep of being very admin intensive, having to write a lot of reports and all that. So really, we'll be really excited to see how you know, the angels, the employees who are cashing out on the equity are going to invest into, and how this investment trend is going to change. So I'll pause here a bit. Is there anyone who wants to unmute and also ask question or comment?
Maybe I'll just add in like a slight comment as shared by Gerald. I think if you use the example of Clubhouse, essentially what you're really referring to is you're thinking about the potential, right? Like, yeah, like in India, they always talk about the potential, right? In India, in the long run, how India is going to be huge. But the problem is, I think part of the problem is people tend to only focus on the present, right? At least in Singapore. So I'm not sure how long it will take to change the mindset, but hopefully soon, because I really believe in Southeast Asia.
Thank you. So shall I now us, Seb, to share a bit of your fundraising experience and how is the if there's any platform, for micro, is it called micro VC or micro fund? Yeah, that people can look into.
Arjun might have a bit more to share on that, but broadly, in this round, the one interesting thing that I think more founders should take a look at is AngelList has this tool, new product that they launched called roll-up vehicles, and that is basically meant to roll up as many angels as you want into one SPV. There are two downsides to it, but then I'll speak about why it's a great product. Is that the only downside is if you're based in Singapore, you can't raise money from the same country you are in using the RUV. And two, all of the LPs that invest through the RUV need to meet the US SEC rules for an accredited investor. And thankfully, though, if you raise a lot of money from other founders, most of them qualify to be accredited investors because their share of their company is usually more than 1 million. So that's that, and so I used that to raise a lot of tiny checks from founders who were a few stages ahead of me. Not so much because I needed the money, but so that I am assured that they will pick up my phone or respond to my WhatsApp when I need them, when I get stuck somewhere and I need their help to brainstorm some ideas. So I did about $80,000 to $100,000 through that. Through the RUV. Of course, it doesn't help you with finding those angels. It's not something you can publicly spread the word on, unlike AngelList syndicates. But you still have to seek out those investors. And as luck would have it, the funds that that have so far committed, they have been able to introduce me to a lot of other angels, other founders who were a few stages ahead of us, and that helped us close a lot more deals.
Thank you for sharing. That's interesting. I just want to point out in Singapore, it is if you want to raise angel round and then you have more checks, it's not part of the SPV. You need to be aware that there is a maximum of 50 stakeholders that you register on your ACRA if you are doing an equity round, because beyond 50 people it actually becomes like a public company. You need to do a lot of disclosure and all that. So crowdfunding wise, I think so far the standard is having an SPV, but of course with SPV depends on how you do it, right? If you go through a lawyer, then that you will incur costs on an annual basis. So that's something to think about. And then if you accept too small a check and from someone who is not so strategic, then what happens is that you have to deal with quite a few people every time you want to fundraise, or like you want to, I don't know, make some kind of major decision that you promise that you update the investors about in your term sheet or in your agreement. So having to deal with a lot of people, it really takes time and bandwidth. So that's something to take note of as well. I think beside AngelList, in Singapore, in the region, there are also quite a few crowdfunding platforms like Funded Here, Fund Now, and a few like Funderbeam. Has anyone tried any of these platforms? Okay. Thanks. No worries that no one has tried it. Candice, I want to ask you, if you have any question about fundraising now that you are going to build your own business, do you think that would be a hurdle when you start your own business?
Yes. I think it will be a challenge. Actually, I have spoken to a few potential angels. Some of them are complete strangers. To be honest, I haven't asked them for money per se, but they've given me very good feedback on what I need to do to make sure that my idea is fundable. So I'm probably at that stage now. I guess my challenge right now is I am actually not sure how much to ask for. I think maybe that's a separate question, because after talking to them, so I asked them like, so do you think this is fundable? They said, well, I don't know how much you're asking for. So that's where I am at right now. So I can't really say, honestly, whether it's going to be easy or difficult. But I feel that, actually, I find that, the community has been very, very helpful. So my main objective basically right now is to build my network, which to say, because of some personal reasons, I was completely shut off for many years. So I'm kind of like literally on a restart right now to build my network, and hopefully, it gets me somewhere. Yeah.
Thank you.
I don't know whether that answers your question, but I think a lot of points raised today has been very, very helpful. And I do agree with what Elise said earlier, that, sometimes when you join a program, if the entire cohort is at a different pace, or you may not get the support you want, you're actually wasting your time. I would love to have joined more Makan for Hope sessions, but my timing was too tight, and there's Olympics as well. And what some of you said about the gap of, having what you call micro VCs that actually fund the range between maybe 500,000 to $1 million is missing. I think that's very true as well. Yeah. So I'm learning a lot. So thank you. Yeah.
Thank you. I think Gerald has his hand up.
Yeah, I just remembered about something that might be interesting for most of the founders raising funds that probably most of you might not have thought of. So there's this, for those that are in blockchain space, there's DeFi, there's JAX. That might be an opportunity for you to raise funds as well. We attended a session, or rather I hosted a session by one of the Stanford prof that's in VCs. And he made a comment saying like, there was an audience asking a comment like, how do you see like the blockchain, the DeFi space disrupting VCs? And his comment was the same, like how back then there was like crowdfunding, and then like they haven't really disrupted VCs, but it is an alternative source of getting capital. So if you want to explore, like the DeFi blockchain might be a way to raise some sort of a initial stage fund. Also, like in terms of like structuring your fundraising, sometimes you need a bit of strategy to get the full amount that you want to raise. So what I mean is like you could have different tranches, right? Like a first round to close a few people, because usually investors would jump on if they see other investors coming in. So like the main question is, how do you get your first one? So you could always offer your first few at like a discount, and get it a small check, right? So you don't lose a lot of like incentives. And then for the ones that come in later, you offer them like stricter terms when you have like the traction of investors coming in. So these are some of the tips that I would like to share. Yep.
Yeah, thank you for sharing that. Yao Hong, you have your hands up.
I guess one more point to add is that instead of equity, there is also debt that you can look at. So for companies with certain revenue that's coming in, you could always find some venture debt investors that can help with it. Yeah, I know some people, so if you have them, you can speak to me. Thanks.
Thanks, Yao Hong. I am aware that we are running out of time, but I want to quickly mention about the venture debt. So venture debt, so I support EF companies and non-cash companies, blockchain companies in fundraising. So I do see that in early stage, convertible note is very popular and in an early stage. But I also want to caution that when you raise money from convertible note, you need to have in mind when are you going to convert these convertible note holders, and at what valuation, because oftentimes the convertible note has either the discount or the valuation cap. And then if you were to fundraise much later at the equity round, that is qualifying. So qualifying meaning that the convertible note holders have to convert their debt into equity too late, so like let's say the your convertible cap was like 4 million. And then when you finally do an equity fundraising round, it was like 8 million. So then it will be a huge discount given to the convertible note holders. So raising by convertible note is great, in terms of like speed, convenience, cost, and also it being a commonly known instrument, but need to plan ahead as well so that you don't like dilute yourself too much if you were to fundraise a bit later using equity. Yeah, but that's definitely a common way of fundraising besides equity. Yeah. So with this, I think we come to the end of this discussion. I'm going to stop recording. So thanks for participating.